This is Market Day Report. Welcome back. I'm Tony St. James. Weekly export sales numbers out from USDA. The corn number a little higher week over week, but much lower, down like 39% from the 4-week average. And it's reflected in prices this morning. July corn off 3 1/4, 4.16 3/4. D's at 4.33 3/4. Half penny off the day's low is down 2 3/4 cents. For soybeans, we're watching movement lower there. July off 6 1/2, 11.56 1/4, and the November trades 2 pennies lower at 11.05 as a 49% decrease from last week on our export sales, and that's old crop sales. Wheat moving higher right now after 667,000 metric tons reported sold in our third marketing week of this year. July 554, it's up 12 3/4 cents. Deferreds are up 10 to 12. Hard red with single-digit gains. July at 5.84 3/4. It's up 4 3/4. Roll out to the March, it's 7 cents higher. And in Minneapolis, spring wheat up 11 on the July at 6.07, penny and a half off the day's high. The deferreds with single-digit gains. Cotton, however, has not been moving in that direction. We're watching really the October. Not anything happening in July. So the October at 73.46 is down 113, trading lightly. The actions in D's at 73.82. We're off 152 points. Let's bring back in Ted Seifried. Ted's with Zaner Ag Hedge, and that kind of sets the stage, that weekly export sales, as we have a couple of reports coming out tomorrow.
Yeah, absolutely, Tony. Sales were okay. Like you said, I mean, corn down a bit from the previous week's average, 4-week average, but, there's still some decent sales. And it's that time of year where things kind of start to slow down a little bit. The soybeans were a bit disappointing, for all the talk of old crop beans finding export interest. That, yeah, okay, it's still a positive number. We're not seeing cancellations, not yet, not just yet, or net cancellations, I should say, Tony. But it's still, I'd say, a fairly disappointing number compared to what all the rumors had been. So, yeah, under a little bit of pressure here today. But that's kind of leading us into the reports. When you look at the reports and the trade estimates for the reports, the trade's looking for higher acreage across the board. Not sharply higher acreage, but just marginally higher acreage. Now, when you put that together with the kind of difficult planting season that we had, I think that's a bit of a disappointment for the market. I think the market wanted to see, especially for corn, a lower corn acreage number. By the way, I have a lower corn acreage number, so we'll see if that comes to fruition or not. But the thing about that is that there was, 6.2 million acres of principal acreage that was unaccounted for on planting intentions. So obviously, most analysts are adding some of those acres back, and that's offsetting some of the potential prevent plant acres that probably some of the corn acres went into in some of the weather areas. So acreage numbers, interesting. There's a wide range of guesses. We don't generally get them right. Analysts don't usually get them right. So there could be some fireworks on acreage tomorrow. But don't sleep on quarterly grain stocks. That's the one, I think, for me, which is going to be the most interesting. It doesn't get a lot of talk because it's a lot more difficult to come up with a quarterly grain stocks estimate. Your average market follower doesn't have a quarterly grain stocks estimate because there's kind of a lot that goes into it. But that's the one that could be the big surprise, especially for soybeans. Because if you look at the way that the old crop, new crop, the July, November, or even the August, November spreads have been trading, it's suggesting that we've got a lot of tightness in old crop beans. If that is the case, that means that the USDA was wrong about something, and that quarterly grain stocks should come in a lot tighter than what expectations are. I agree with the average trade estimate. By the way, I'm 8 million bushels off of the average trade estimate. So I think that's the number, Tony. And if it comes in much different than that, specifically if it comes in lower, well, that goes a long way to explaining that inverse and that strong inverse in the spread. Right. But it also suggests that we're going to have some tight soybeans between now and the end of the marketing year. So I don't know. Tomorrow should be very interesting. It's one of the biggest reports of the year, and we usually get a lot of big moves after that.
Yep. You said fireworks. 4th of July coming up next week, so let's talk about what we'll put on that grill for fireworks as we come back in just a moment. You're listening to Market Day Report. It's Market Day Report, and let's go to the big board for livestock futures. And starting with cattle, we're seeing a movement higher here. June live cattle up 52.5 at 193.45, just a little over a penny off the day's high. But August, most active, up a dime at 186.85. Feeders, we've been watching them move higher. On the August, again, most active there, up a nickel at 261.82, unchanged on September, lower in the deferreds. And the hogs have been moving higher on the export sales possibility of a positive quarterly hogs and pigs report as well. July is lower, but August nickel higher, 89.02. Let's welcome back Ted Seifried, Zaner Ag Hedge. And as we get ready to head into reports and the weekend and Independence Day, what are you watching?
Yeah, look, big day in the cattle complex yesterday, and today is very quiet, right? That's generally a good thing. August live cattle got up to the highest level it's been since October 11th of last year. We had spent this entire calendar year really struggling to get through the level of consolidation that we had in February and March, and we've finally done that, and that's great. So for the fact that we're kind of holding up near those highs, I'm okay with the fact that we're not sharply higher on a follow-through, because at some point you need to take a little bit of a breather. You start to get overbought. This kind of fixes that. Even trading sideways fixes that. So holding strength, I think, is a really nice thing to be seeing right now in the cattle and even the feeder. So good stuff there. And again, not terribly surprising, headed into basically the peak demand season of the year, or demand weekend of the year, next weekend. And then hogs. Yep, export sales are pretty decent. Actually, really quite good. Yesterday was a really good day for the hogs. I would have liked to seen a little bit more follow through to the upside for the hogs. I know that's very different than what I just said about cattle, but hogs have been in a downtrend for so long. It'd be great to string together a few days of higher trade. And so far today, it's been a little bit disappointing. We've come off those highs. So I don't know. I'm watching hogs closely. I would really like to see hogs close positive on the day.
Yep. Good news there, Ted, and good insight. Ted Seifried with Zaner Ag Hedge.
One of these days, we're going to get Ted, and I think he'd probably be up for it, to do that report from his Peloton. It's always right there in the background.
Absolutely.
Maybe just have him, as he's pedaling, kind of give us that report. Because if it's bad news, we're still going to smile, because he's kind of doing a little bit
We
of a
can cheer him on,
right?
too.
Thank you, Tony.